Hello, and welcome to another episode of Darwin Investors. We had another bad week on the market last week. We're having a lot of these. It seems like that every time the market, might catch a little break and wants to go up, the institutions are kind of using it as an excuse to sell off. It's like none of these rallies are very sustainable. Um, I thank a lot for everybody for checking out the channel. I know I get like a lot of comments, and some of the comments that are left just a little bit concerning because it would be like younger people saying they want to get into stuff like QYLD or like a JEPI or RYLD or something like that. But the the point of those stocks is not to grow your portfolio. Those are to like supplement your pension or something like that. Those aren't the sort of things that if you're a 30-year-old that you want to go buy QYLD, because in the end of the day, that's not going to get you as much money as investing in a good high quality company or even an S&P index fund. So remember, those are just for retirement. It's for like it supplement your pension. Um, got my very first robot comment uh, like last week. That's pretty good. I was gonna delete it, but I thought, it's my first robot comment, and then of course there was like six comments that comes after it, and I don't know. Maybe I'll turn it into an NFT. I don't know how to do that, but maybe I'll do that. All right. So what do we have in store today? So let me go ahead and share my screen, and we'll get right into this. So last week was a bad week, as we all know. Um, but I have to ask myself if you're in a if you're like in an S&P index fund, would you sell your stock? Like, would you continue to put money in every 2 weeks? Um, and if the answer that you have is that you would continue to put money in every 2 weeks, um, then that's probably the right answer. Like you want to put in money as every couple of weeks as the market is going down. Now, if you have stocks that you're thinking about, well, I need to sell this stock right now. Well, um, that might not be the right stock for the moment. Maybe there's like a gut feeling or something like that. You know that this is not a good idea. You don't really feel like adding to it, and you don't really feel like holding it. So maybe find the types of stocks that you might feel like you want to hold on to through these tough periods. We're going to look at a couple of earnings that I thought were interesting last week that came in from Alcoa and CSX. And then I'm going to look at a couple of companies that are going to do to report later on this week um, that I think that could be a tell on unfortunately a lot of my stocks and a lot of the market. But and then finally I'm going to talk about just like a little early retirement myth, because with the stocks getting clobbered and everybody's retirement funds are going down and not going up, it made me kind of like reflect a little bit on early retirement, and is it, what is the reality and what is the myth. So on last Thursday, Jerome Powell came out and he said that inflation, that it's absolutely essential that they do a 50 basis point hike in May. Now, I guess I already knew this. I don't know how Wall Street didn't know this. I mean, I'm not exactly perusing the dark web for this stuff. I mean, this is right off of CNBC. If you're just watching television, you know that there was going to be a 50 basis point hike in May. But for some reason, this really spooked the market to, I don't know why, but it did, and it caused a big sell-off. The S&P didn't do terrible last week. It was only down about 2.6%. The Nasdaq was down 3.6%, but my portfolio got hammered because I have a lot of Nvidia. As a matter of fact, uh, AI, if there's robots putting stuff out, maybe that helps Nvidia. So go robots. One of the companies that reported last week, and I think that this is concerning, is Alcoa. And I think this is kind of a tell and something to kind of keep an eye on. So you can see that Alcoa was down 23.44% the last 5 days. And that's because they reported earnings right here. And it wasn't that their earnings were bad. Their earnings were fine. It's that they believe that their best days are behind them. And I'm wondering if this is going to be a theme going through from a lot of these mining stocks. And so let's just look into Alcoa. It says The shares of the aluminum giant plunged this morning and were trading down as much as 13%. Given the way Alcoa stock rose in recent weeks, today's knee-jerk reaction is a surprise, as the company just delivered a strong set of first quarter numbers. It simply failed to meet the market's expectations, and multiple analyst downgrades have only helped fuel the negative sentiment. And I'm wondering if this is going to be a theme going forward, that a lot of these high-flying mining stocks are going to be coming down as they're releasing earnings. XME, which is the Spider Metals and Mining ETF, it's been on a tear this year. 1 year it's up 39%. Year to date it's up 28%. If you look at the holdings of this ETF, this is what I think is really interesting. So you see here, this is as of 4/21/2022. So current as of what, about last Friday, right? And so Nucor was the biggest holding, followed by Steel Dynamics, followed by Peabody Energy, and then Cleveland Cliffs. If you look at the holdings here, as of the 8th of April, we're going to see that their biggest holding was MP Materials, second biggest was Cleveland Cliffs, and then Peabody Energy again. And Alcoa was right here, coming in at about number 8. And Nucor was like number 5. And so what they're doing is they're basically trimming certain equities and adding to others. So now Nucor is 1 where it had been 5. Alcoa is not in the top 10 any longer, and Cleveland Cliffs has moved down a couple spots. And so they are trimming. They're taking some of these wins here. So if you're in these stocks, know that these big companies are taking some of these profits here. Year to date, Nucor's up 41%, Steel Dynamics 44%, BTU is up 143% this year. Cleveland Cliffs up 33%. So they're going ahead, and as these things are reporting, they're taking their profits. So if these are the companies that you're thinking about moving your money into, just understand that you're going to be doing it at a time where I believe a lot of the big funds are looking to take profits. One of them that I thought was pretty interesting when I looked at here was this Peabody Energy Core. I'd never heard of it. It's up 143%. Let's find out a little bit more about it. BTU does oil, gas, and consumable fuels. It's trading for $24.51. It's up 134%. What is it? 116% year to date. However, just like Alcoa, there was a big sell-off in this one last week. You see, last week it was down 26% in 1 week. And so though these things have been winners this year, I'm not sure that all of them are big winners going forward, and just be really careful if this is the sort of thing that you're going to flee to. On the other side, there's the transports, and the transports ETF has been down 8%. The past 6 months, it's been down 10.68% this year. CSX put out their earnings, and so did Union Pacific. And we'll look and see. Now, these ones have been beaten down. So like I said, the ETF for transports has been beaten down, and these stocks have been beaten down. And so when these guys report strong earnings, you notice their stock goes up. And if you look at Union Pacific, it reported on Thursday, and its stock went sharply up. Now, they finished down for the week, but they were up on earnings. And so what was it that they reported? Well, here's CSX. Railroad giant CSX reported better than expected first quarter earnings Wednesday night, with Union Pacific topping revenue views early Thursday. CSX stock rose while Union Pacific edged lower. So what we found, and I think this is important, Wall Street earnings expected 37 cents. They got 39 cents. So that was a good beat. Revenue rose 21% to 3.14 billion year over year, which was a 24% rise in revenue, but they had a 2% volume decline. And the way I kind of interpret this is that they're able to charge more for their freight right now. However, they're not sending as much out, which to me tells me that there's this demand destruction that's happening. We're going to see more of this. We're going to see a lot more volume decline. So the supply chain problem may not be as bad as it might be fixing itself right now, according to some of these transports. What's going to be coming up this week that I think is going to be interesting to have a look at is on Monday, we're going to have Activision Blizzard is going to report, and I'm interested in that because I'm an Nvidia shareholder, and these guys are going to report the health of the gaming sector. If Activision Blizzard comes in on Monday morning, and they say that that the gaming sector is on the decline, that's going to take a lot of stocks. It's going to take AMD with it. It's going to take Nvidia with it. It's going to take a lot of the semiconductor companies with it, depending on what these guys report. So I'm very interested in that one. I'm also very interested on Tuesday. We're going to get DR Horton's is going to report at 6:30 a.m. on Tuesday, and so this stock, you talk about a stock that's been pounded. Look at this thing. This year to date, it's down 32%, $33.91 a share. This thing is it's taken a beating, and it's going to report earnings on Tuesday morning before the bell. We're going to see whether or not the housing market is strong or weak. And if this thing reports any strength at all, I would expect a nice bump up on that day, just because of the way it's been so far beaten down. And lastly, the one that I'm kind of like interested in seeing, and on Thursday after the bell, U.S. Steel Corp is going to report, and they're going to be at 4:15, and that's going to be next Thursday. And what I'm interested in seeing with U.S. Steel is you can see that this year to date, it's up 40%. In the last 5 days, it's down like everything else, but it's down significantly, 9.6%. But what I'm interested in seeing is how different world events are affecting this stock, and whether or not, if it doesn't report not only a perfect quarter, but also perfect guidance, to see if this one's going to take a beating. Because I think this could be like, I think that Alcoa maybe shined a little bit of light on what's going to happen to some of these mining stocks that have been running so hot. And I'm going to see if U.S. Steel continues in that fashion, if it's going to follow the lead. I'm going to talk about retirement and the myth that is retirement. And one of the things that when I think of retirement, I think of like work-life balance. And I don't know that it's so much that people want to retire early, at least myself, as much as I want more of my life back. So it's not that I dislike work, but I would like my regular family to be my family, and the work family to be just that, just like a work co-workers. I would like my home to be where I live, my domicile, and I don't want my home to be an office 20 miles from here with that that I spend very little time here and more time there. And I think that's what most people probably want, just a little bit more work-life balance. Like for me on Saturdays, things are really special. So how do I know, like I find something really special, is because you don't get it all the time. And so like on Saturdays, I'll wake up at like 4 o'clock in the morning just to enjoy Saturday, because Saturday is kind of like my day. I'll do whatever I want to on Saturday. I'll wake up like 4 in the morning, and I'll stay up until like midnight. And I'm like, that's my Saturday. And then Sunday, it's kind of like preparing for the coming up week and all that stuff and doing chores. So it doesn't feel like quite the day off that Saturday is. So I wake up early, I make the most of Saturdays. And I think that that's the way that, like, basically, if every day was Saturday, I wouldn't enjoy Saturday quite as much. It's like if every meal was a 5-star meal. Like, let's say you go on a cruise, and like first thing in the morning, the breakfast is just like this beautiful meal, and lunch is this beautiful meal, and dinner's been prepared by a professional chef, and it's beautiful. If you do that every single day of your life forever, it's going to lose some of the special qualities about it. Same with like hanging out on a beach. For me, I go out to a beach. I'm not really hanging out on a beach very often. I get bored after a couple minutes. And I was like, okay, what do you want to do now? My idea of a vacation would be more like golfing, or like going, up to the mountains, and maybe hiking around, or perhaps going to like a historic district in cities, and just taking in the aesthetic of the whole place and stuff like that, and just walking those streets. And so that's my idea of vacation. Retirement portfolio is taking a beating. I don't think I'm ever really going to retire anyway. I'm probably going to just switch to more of like a work-life balance, where like I work a couple days a week, and then I'm off like 5 days a week, and that's going to be my plan anyway in retirement. So yeah, if you got out of this video, yeah, please like, subscribe, hit that little notification bell. And if you're a robot, yeah, continue liking and subscribing and leaving comments. You're welcome too. As a matter of fact, if you're a robot, go check out Facebook, because those guys could sure use the help. Anyway, until next time I see you then. Bye.